We actually have a question from an audience member. Suzanne Bartholomew from Iowa asks, how can tax policy be used to reduce wealth inequality? Which I think is, related to all of the things we're talking about. It's not just some of the objectives of tax policy are not only about raising revenue. There are equity concerns, presumably. Natasha, do you want to try to tackle that? How can tax policy be used to reduce wealth inequality?
Yeah, it's kind of a big question and it has like several answers. I would say, and one of the precepts driving some of the reform proposals that Larry and I have made in the past and that Kim Klossing and I made in a piece that we wrote ahead of the 2025 debate were exactly oriented around like how do you get more equity in the tax code? And I think there are several levers, but I'll just say three. One is that currently in this country, we have like a two-tiered tax system because if you're a wage earner who, has W-2 income, your tax liabilities are automatically withheld. So your tax compliance yesterday on tax day was 100% mechanically. If you're someone who earns income in opaque ways, which is disproportionately people at the very top of the distribution, you have the option kind of to decide whether or not you want to fulfill your civic duty. And so, from an equity perspective, from a revenue raising perspective, there's a ton of money there because it turns out that 3% of GDP on an annualized basis, that's about $700 billion a year, that's owed to the IRS is uncollected. But from an equity perspective, making sure that the same set of rules apply no matter how you earn your income or no matter where you are in the wealth distribution strikes us as like super first order. I also think that much of what Larry is describing with respect to sort of the general ethos of not living in a society where if you happen to be handed assets from your family or happen to be handed shares of a profitable business that your family has started and you are using ultimately deploying those assets in your own lifetime, but there's no taxes that are ever assessed because of the nature of how we have a step up in basis upon the transfer of those particular assets. That's like fundamentally unfair, and it creates sort of inequities that persist across generations because it's not just inequities that are in society today. It actually allows people to build up dynastic wealth in ways that ultimately no tax revenue is ever born from. So that also has to be first order, not just from a revenue raising perspective, but also from the perspective of equity. And last thing I'll say is that currently, if you have the current nature of our tax system is such that if you're a large multinational that has at your disposal the tools and the tax planners that can help you figure out where you want to locate profits in order to minimize your tax liability, that's sort of available to you in a way it's not available to companies that are domiciled in the United States exclusively or small companies. And that's another layer of inequity. It's different types of tax treatment depending on what type of corporation you are or how you organize yourself. The same thing is true with respect to partnerships. They get to organize themselves in ways that the rest of us aren't able to, and are able to take advantage of tax opportunity or lowering their tax liabilities and tax loopholes that allow them access to preferential treatment. All of these rules need to be changed, not just because we're going to raise a lot of money to meet our pressing revenue needs, but also because we're going to create a more equal society.